Hello, everyone. It is Tuesday, February 13th, 2024, and this is the video for today. So, as always, we're going to talk about the market. We are going to talk about the pick from the last video, and I will give you guys a pick for this video. So, let's start with the market here on a longer term basis. Our long-term bias is still bullish. Fundamentally, we are still strong. The earnings are getting better and better as the reports come out about I think more than 70% of the companies will be reported by the end of this week. Inflation is still coming down. We're going to talk more about that in a second because that was a big factor today. The economy is still strong. ISM services is in expansion territory. Unemployment is low. Tech stocks are leading the charge up. No credit crisis is happening. So fundamentally, we're pretty strong. Technically, we are obviously very, very strong. Since this move in October, we have been moving up higher. Some periods of compressions, little bit of dips, not many long red candles here. And when we do get them, they are quickly gobbled up. So technically, we are 10 out of 10 bull as we can be. It doesn't really get much stronger with it than this without going parabolic. And you could even argue that the market has gone parabolic. I mean, it's gone from a low of 409 to a high of 503 in a matter of 3 months. That's a huge move for the market to make. Okay, now shorter term time frame here. This tells us what we wanted to watch out for. After a lot of the news release last week, we got this drift higher on low volume, some tiny candles, and we had some decent breakouts. But we were weary of a pullback. The market had made a pretty big run. We had digested a lot of news. There's not many other catalysts to drive up the market, and we didn't want to be trapped in a whole bunch of longs that would have ended up tanking. So we were cautious here last week, right? We were day trading. I was taking some short-term overnight swings. I was going for smaller size targets, and I was just being pretty nimble. I was also on some bullish put spreads, distancing myself from the action. I wanted to see a pullback in the market. When we have that strength after the pullback, that is when we can get into some longer term swing trades and get into that next move higher. So that's what we're cautious of today. If you look at the price action yesterday and today, you can see that our forward-looking caution was well warranted, right? One note I'll make here about being forward-looking. You tend to miss a little bit of the last move, and if you're able to day trade or short-term swing, you can still capture some of those gains. However, you are balancing the risk and reward, right? You are saying, okay, I'm going to accept a lower reward, and I might miss the whole meat of the move that I would get from swing trading in exchange for really, really minimizing my risk. And the risk of a big drop or a pullback that happens violently and quickly, I don't have to be worrying about what am I going to do with the market or what am I going to do with all these losing long positions that are underwater and taking heat. I can just sit back nicely from the sidelines and evaluate the price action. Okay, shorter term market bias here. Bearish. We are bearish. So we can first look at this price action and we'll zoom in into the news catalyst for the day. So the first clue was yesterday. So yesterday we had a really nice move up. In the morning, volume was decently light. We started to compress at the high of the day. We broke down here, and then we had a double top lower high. And with that lower high, we cut right through VWAP. We had some long red candles, and we closed near the low of the day. On the D1 chart, this came in the form of a bearish hammer. So we don't take any trades on this bearish hammer, but to me, this is a signal that we should exit some swing longs, right? This is the potential sign of a short-term market reversal. Now, it may not be, right? It may not be, but that is what the price action usually suggests. We also had CPI coming out tomorrow. On a cool number, the market would continue higher. On a hot number, the market would go lower, right? Why would it go lower? Well, on a hot number, it gives the Fed more room to hold terminal interest rates longer, and they postpone the rate cuts. Their whole rhetoric is they don't want inflation to come back again. The economy's still doing really well. despite the very high interest rate environment. So their fear is that if they cut rates too early, then the inflation is just going to creep back up again. They do not want that. So they're kind of in this little standoff here. We're going to hold it until we see signs of economic weakness or recession, or until we see interest rates come down dramatically. So the CPI number here came out a little bit hot today, 3.1 actual versus 2.9 expected, so slightly hot, and that's why we're seeing some market selling today, because it implies that these rate cuts may be pushed back longer. If you go back to some of my previous videos, you'll see that I was also thinking the market was a little bit too optimistic with their rate cuts. I don't think we'll see any rate cuts for the first half of this year. I think that it'll take some more time for inflation to come down. So pending that the economy is still strong, I think that it's more likely we see rate cuts in the second half of the year. And my prediction is that we don't see any in the first half of the year. So when that gets priced in the market, it will have a negative reaction. All right. So now we are going to look at the intraday chart for SPY, see what clues that we can get. So the first thing here is that let's zoom back to yesterday's close. So here's yesterday's close. You can see the market was drifting down anyways with some follow through selling. Probably some asset managers also de-risking before the CPI. Here's the CPI reaction, very bearish, and we continue this momentum all the way until the open. So obviously a very bearish reaction for the CPI. Now with this big gap down, we needed to see what would happen in the first hour of trading. So we moved down earlier, right? So that is a bearish sign. And then we had a nice strong move up. So this is excellent. Now we wanted this move to continue into the gap, right? If we get some strong momentum into the gap, we have an excellent opportunity to get long. However, you can see that from this move in the gap, the candles were mixed and tiny, right? There was a lot of fighting happening at this level. There's a lot of selling pressure. If there was not any selling pressure, we would not see this kind of price action. If there was stronger selling pressure, there's weaker selling pressure, we could see some nice clear momentum going into the gap, and we had a lot of room to the upside to fill. So this was the warning sign right here, I believe, in 1150. You can see that we had a big move higher, 1OP kind of cresting down, LRSI crossing down here. So this is where you'd exit longs, you wait on the sideline. Do we hold VWAP? Is this an inside day? So let's see what happens. So over here, we bounce off of VWAP, which is a pretty decent sign, and then we immediately fall and close below it. So sellers took this opportunity at this level to get back in and exit trades. Any people who are long at the open right here also took this opportunity to exit out of positions. Now we go over here, we're compressing, and there's no liftoff. So what this tells us is that sellers are still in control right now. This move up was pretty wimpy. It didn't generate anything. We have a nice steady selling move down. The other thing is that this had the opportunity to become a late day bearish trend day, right? If we break through this low, all of these bulls over here who are in this bounce, they are going to be flushed out. So, and that's exactly what happened, right? We over here, we hit the low of the day, the sell programs kicked in, and then when we broke through the low of the day here, you can see that the selling really accelerated, right? Shorts piled in, sideline shorts also piled in, bulls were flushed out, and then we made a new move lower. You can see how much it accelerated after that move. Now, the hour's pretty late in the day, it lasts 30 minutes, so there'll probably be some profit taking. This is what you probably want to get out of your day trade shorts. But honestly, when you had this breakdown of VWAP here, this is an excellent time to take shorts. And you knew that if we broke the low of the day, this move had a chance to accelerate, and you could add on this candle right here. So that's how you would play the day, intraday bias. Now, let's look at the positions that we had from last week. All right. So, or not last week, sorry, from yesterday. ANF. ANF was my pick yesterday, and you can see how well it is held up today. It's actually kind of insane, to be quite honest. Let's say you took it here at 114, 115. You got the market completely wrong, right? Gap down, started a bearish trend day. ANF filled in the gap and is holding at the gains as the market is doing just absolutely dropping on heavy volume, and the volume is picking up. So if you took this trade, let's say you got it on that pullback over here, right around, let's call it 114.50, you had a chance to exit at around 116.50, right around over here, 116.30, for a decent $2 gain on a $100 stock. That is pretty decent. That is pretty decent considering the market has done the exact opposite. So ANF I am going to categorize as a win. I did not take it because it did not align with my market bias, but if you felt that you could weather any sort of pullback with the stock, this was the one to do it in. Okay, now let's go over a pick for the day. I am bearish, but I don't want to be taking overnight swings in a very strong long-term market. So I was looking for stocks that I could day trade, and I'm going to give you one stock that I liked over here, which was Illumina. Okay, so why did I like Illumina? First off, on the D1 chart, you can see that it wasn't really rallying in this last month-ish of SPY action. It was sort of waffling around here. After earnings, it had a negative reaction. It's rejecting off a lot of resistance at this level. And today we broke down through the 50 SMA. If we zoom in on a 5-minute chart, let's take a look at the story here. We had a pretty strong move down on heavy volume. Then we had a pretty decent bounce up, pretty tall. We tested the halfway point of this long red candle, and more importantly, we tested this SMA. So this bounce is not ideal, but it did provide us some information here. The bounce started to stall at 11:15, and we could look at the timing of these to see the clues that Illumina was leaving off. At 11:15, the market was still moving up a little bit, but Illumina started to move down, started to compress, and started to move down far earlier than SPY did. You can also see that it started to move up a little bit later than SPY. So SPY started to rally at 10:15, made some decent gains until 10:25. Illumina didn't really rally until right about here, 10:45, 10:50, after SPY was already at its high of the day. So we had a late move up and a quick move down despite these green candles. You also notice that these had pretty low volume. So it just tells us that there weren't that many sellers pushing it down. They and buyers over here got magneted back up over to the SMA. Now started to move down and down and down. It wasn't the strongest stock in the race. You can see it was pretty even with SPY all throughout. But throughout these bounces, Illumina was not bouncing at all. It was simply compressing. So the day trade that I wanted to take, but unfortunately I had a meeting, is I entered right here. I'll tell you exactly, at 13:38. I entered on this candle right here as it was compressing. I knew this stock compressed, made a leg down, compressed, made a leg down. My market bias was bearish, and this was the market right here. It was starting to drop, and I felt that we would test and break the low of the day. If we broke the low of the day, the selling would accelerate, and this would give Illumina the momentum to break its own low of the day. So I took it at 13:58. My original plan, given that the ATR of this stock is about $6, I'd like to take maybe $1.25. So if I could get out at 129, then that would be an excellent trade given the market momentum and the weakness I saw in the stock. So if you zoom out here, I was right about the market breaking through the low of the day. Illumina didn't participate at first and then finally fell through. Once it broke through this level, you can see how it just kept going down and down and down. Now over here, you can see this bearish hammer, and it started to lift off at 305. You see the market at 305 starting to go flat. So it's picking up this relative strength here. I said my target was 129 is incorrect, 130, because at 130 is about a $1.25 move. So it hit my target at around 130 right here. I would have sold into strength somewhere in this candle, and that would have been a very nice move captured on the stock. The ideal entry, in my opinion, would be this 105 candle right here as Illumina breaks through its VWAP, and SPY has already broken through its VWAP, forming a lower high double top and a new low. So I feel that the ideal entry would be here. We've rejected off the SMA and we're through VWAP, and we can ride the rest of this move down, and you could probably get double profits over there. That is what I would like, but I didn't get, I kind of saw the stock a little bit later, but I still felt that there was a good probability trade. So that was my pick. I did not take it because, again, I had a meeting, but I really liked what I saw. You can see now it's popping back up with the market. It's gained that relative strength. So let's say you are like uber bearish and you're like, hey, I really need to take an overnight short. I am super bearish. I'm feeling this market. There's a couple of picks that come in your way. So I noticed that consumer cyclicals were pretty weak today. Best Buy breaking down over here. So we want a stock that is really weak. Okay, so a couple ones come to mind for this stock. Let's look at a couple of charts here that are weak. One, major technical breakdowns on heavy volume. So MU is one. You can see that it broke through its 50 SMA over here, and it finally made a new low of the day on this market move down. I believe this is a chip stock. Oh no, it's storage solutions. Okay, that's good. I would not be ready to short a chip stock given that the sector is so strong, but this had a great breakdown, doesn't have earnings for a while. This would be a pretty nice pick. You can see that how it held the gap here, formed a double bottom, and then again, as soon as we broke through this low of the day, you can see that pressure starting to accelerate. So MU is one that I really like, and pretty nice relative weakness to start out the day. UPS is also one that was pretty nice. The volume is a little bit lower on the stock, but you had a great LRSI bounce off of VWAP. It came through its AVWAP-E. And I like the daily chart, how it had a big earnings gap down, moved higher, tried to test the gap and got rejected, and then is starting to inch lower. It did not bounce with the market at all last week, which was a nice sign of resistance. This was a nice candle, but it looks like it potentially could have been a short covering. We also know that UPS is a little bit choppy. It does trend. This is a decent trend, but there is still some volatility happening over here. All right. GT was an excellent breakdown. However, it may be a little bit overextended today. Really nice post-earning move. Let's look at the M5 chart. Yeah, steady grinder down. However, it's still digesting a lot of the gains, so that's why it's been relatively strong. This still could go down, but you would have to be careful of your overnight risk on this kind of stock. All right, let's look at AMT. AMT was a great example of watching for daily support and resistance. So really nice breakdown here. You can see how it was testing and trying to fill in this gap. So I've drawn this gap over here. Let's get bounced right off that level. Couldn't get quite through it. And that's why it was not able to move a leg down lower in this last stage of the market drop. There was support in the way, and the buyers were offsetting the selling that was happening in the market. So the better place to take AMT would be on the rejection of VWAP on the low of the day. When it breaks through it, you can ride that move down. This is a pretty strong bounce. The market is still weak, and when it's unable to really get a new low with the market here, 250, 255, that's when I would be taking gains on that position. So AMT is another potential day trade, but this major D1 resistance would mean that you would have to be pretty careful. So if I had to give a pick, I am going to go with MU for a overnight swing. So again, I'll keep this pretty short. And here's how it's structured the trade. You'd use the 50 SMA over here as your stop. So that is 83.22, and it is currently at 81.18. Okay, the ATR of this stock is about 240, so I'd go for a $1.20 move. Go for a half ATR stock because we are having a shorter term duration. You can see how it has pretty nice relative strength or relative weakness right now. It's digested some of the gains, and it's a very nice steady grinder lower on very heavy volume. If you can get this stock on a pullback, right, you do see how it moves up and moves down on a nice LRSI pullback, then you can get a pretty good entry price. So that is how I would trade MU on an overnight swing. If you look at the stock, you see that it is pretty choppy. It'll move back down, and then it'll gap down lower and try to fill in the gap. It doesn't make super consistent moves, but we have a nice technical breakout. So keep it short term, and when you see this move fill in, right, know that you have to get out on this next leg lower because it's likely to fill back in again. If we have a weak market trend in our favor, right, we know that this stock will drop. You can see how it did not rally in the last stage of the market rally. And the first sign of market weakness, it cracked through a whole bunch of support. We had support here, EVWE, the 50 SMA. We had this earnings candle over here. So a lot of support at this level. If we draw the next level of D1 support, I see it right around over here, which has plenty of room. So MU, nice bearish reversal chart. Let's look at a HA candle here, flat top red HA candle. This is my pick of the day if you have to take an overnight short. I don't have that confidence myself personally, so I am going to not do that. I'd rather day trade that kind of stock, but that is what I am looking for in MU. So watch the close here. Let's see how the market closes. We're stacking some long green candles here. The reason I'm hesitant, and this is the last thing I'll leave the video off of, the reason I'm hesitant is that every single big drop that we've had in the market has been bought the next day. That is a pretty big sign. We know we've had follow through from the high. I don't want to see another leg lower, right? Or compression for me to be more confident in those overnight swings. I'd have to know that MU would be able to withstand this kind of move over here. If I'm not confident about that, then I would not be trading the stock. If it's wavering and holding, I also don't have a lot of confidence to stay in the trade because I'm against that longer term upswing, right? I could easily get trapped in a short and forced to cover for a loss just because I got the market wrong and I missed some of the signs. So that's why I'm personally hesitant about MU, but structure the trade correctly. I gave you the stops, I gave you the profit targets that I had in mind, and we will take a look at it the next day. So let's add it to my picks. All right. So that is it for the video. We will review MU tomorrow, and I hope you guys have a great day.